GM. So we have FOMC tomorrow, the last chance for the Fed to make a change to monetary policy. So today, expectations are for no trades. You're going to see this continued chop, which we have been seeing because there's no incentive to take big positions right before an economic event. You can see the daily candles on Bitcoin. They're super low volatility. We're not getting these big impulsive moves, which actually in reality aren't even big impulsive moves considering what we've seen over the last month or so. We've been blessed with volatility, so it's no surprise to see price chopping around today and yesterday pre-FOMC. But if there is going to be a setup, let's dive into what I'm looking at, and it really comes off this New York Open at 2:30 p.m. UTC. So taking a volume profile of really everything since Sunday to now, we can see the market's been in balance between the value area low and the value area high. This is where 70% of the buying and selling has occurred over the last day or so. So when you deviate above it, the trade stats set up are for a mean reversion short back down. You're fading the move, looking for price to actually reject and go back into balance, and vice versa. If we break below the value area low, chances are the move will be one to fade if it's pre-FOMC, and you want to then actually get long and trade that mean reversion. So that's what I'm looking at. Any breaks above this value area high, maybe if we take the Monday high liquidity today in the New York session, if we are blessed with that volatility today, I'll be looking to fade that move and trade the short on the way back down right side of the V, trading it back to balance with an aim for a quick mean reversion day trade, and vice versa. If we actually break below the value area low, maybe fill in that CME gap, and then I see price is actually reclaiming, you're seeing structure is bullish, then again, I'd look for a mean reversion long just to trade it back to the other side really of the range over here, back to the other side of balance, because expectations are for trending moves to fail the day before a big economic event, because why would you put your capital behind a trend, behind a big directional move when you have such a potential risk of high volatility the next day and a huge decision which could shake the markets? You don't. And that's why every trader is really looking towards FOMC tomorrow and not taking any big directional bets before then, because the EV to do that, the expected value to do that, is just not as good as simply waiting. Patience is really your best friend as a trader. You've got to focus on not only managing the upside of your portfolio, but even more so managing the downside of your portfolio, knowing when not to trade. So those would be the only two scenarios that I'd actually potentially look for a mean reversion setup, is if we deviate from this value area low or deviate from this value area high, looking to trade the mean reversion back down to this average area, which is this volume profile. So that's what I'm looking at on BTC over here. New York session starts in a few candles now, a few 15-minute candles. So maybe we do get some opening drive off the New York session, like this London move over here. Then New York actually faded it, and maybe that's going to offer the volatility, because so far overnight session we swept Monday's low, but hasn't really produced much of a reaction. Now, if that was post FOMC, you probably would have seen a much better reaction, a much better trade off that. But considering, that's why you're seeing this actually just reject here and generally just chop. So Monday's high is the most interesting, because that would be the biggest deviation of price if we can get up there. But Monday's low's already been taken, so that's where I'd actually look towards the CME gap on any downside if that fills. Got some liquidity also over here, which can get taken, and that's where I'd look to fade it again on that long side, as I mentioned. So that's really all I can say for Bitcoin, really. It just is not an interesting market right now. And it's pretty much the same story if you look at all assets. And if we zoom out here on Bitcoin a bit, let's go to something like the 4-hour, get some levels on. We're really just hovering around that monthly open, which is also the weekly open. We're now losing it right now, but I don't think that's any signal here. I just don't think Tuesday is what's offering the signal or any directional moves. Let's just delete this for now so you guys can see what I'm on about. It is just chop, and we are just trading inside of this weekly candle over here at the moment. So Price is compressing. Energy is building right now. And let's see what tomorrow brings after the interest rate decision. Expectations is for a rate cut. Rate cuts have previously been bearish every time we've seen one on Bitcoin over here. You can look. We have September FOMC. We have October FOMC. Here were the reactions to both those decisions. They ended up in price going lower. You had a squeeze with the September one, but overall direction was down. So question is, what's the directional move going to be off the December FOMC, if there is going to be one? Is it going to be a breakout above the yearly open, above this general consolidation we've had, or is it going to actually lead to a breakdown? That's going to be the big question that all traders are looking at. And that's really where your best trades are going to be. It's after Wednesday. So let's see how price plays in this general box area. We're chopping around that monthly open right now, which is at 90.3K. Daily candles are getting squished. Volatility is low. And really, your extremes are as follows. So if you want to actually look for trades on Bitcoin on a multi-day, multi-week basis, make sure you check out the weekly outlook video. I included this in the trade of the week. I dropped that last night for a big high time frame deep dive of the markets. Much more interesting than today's low time frame nothingness that we're seeing right now. But Bitcoin, I've got this range drawn out on the 4-hour time frame where setups I'm looking at going into FOMC would be around the extremes, as you guys know, with range trading. I'd look to get short if we see a rejection, false breakout, and a squeeze up to this high over here. That's, of course, counting on a false breakout and a rejection. If it just continues trending up, then maybe we see something like the orange path where we actually squeeze much higher to that 100K OPEX level in December. So I'd again be looking to fade that move to 200K. So if 100K fails and I see that rejection, that's where I'm looking for a short to take the mean reversion back down. And vice versa on the long side. The extremes are around this liquidity. So we have liquidity at 83.8K, which could be interesting, but more so interesting, this absolute low over here at 80K. I think right now consensus is that if price went down to there, people would bid it, which is why price is not going down to there. It feels like that would be a little bit too easy right now. People would want to buy any liquidity sweep over here, and that's why kind of getting these higher lows forming, which can show early signs of demand potentially coming here. And it does mean that demand is stepping in at higher prices. It's not letting people get those beautiful sweeps of all of this liquidity. So that suggests to me that most likely the next setup that arrives is going to be a short fading any big squeeze up into these areas. And if you see that rejection, be looking to take that setup, either red or orange path, because looks like longs definitely are bidding in the low 80s. That's been confirmed twice here. We bidded in the low 80s on my spot portfolio. That's up very nicely. So you don't give people loads and loads of chances in a very short concession. If it did actually go back down here, then I'd be much more inclined to actually think this is going to actually break down if it's in the short term, if it's, in the next week or so. So actually with this green path here, I think that's probably something that maybe plays out later in the month, maybe even in early 2026. And it's actually going to be red or orange path that's most likely around that FOMC. And this would set up your multi-day, your potential multi-week holds for those swing trades, if you like. But in between now and then, that's our day trading setup for Bitcoin, looking for deviations around this volume profile to trade it the other way. So that's really the full update for Bitcoin. Not much interesting. Got to remember to stay patient as a trader. Trade in the environments which offer the best setups. Don't trade in the environments which don't offer the best setups. That might sound simple, but a lot of people want to trade just for the sake of trading, and that's a casino mentality. That's just like being at the roulette wheel, just smashing the button, rather than being a sniper, identifying your game, identifying what you're good at, being patient enough to wait for what you're good at and sit on your hands when you know you're not operating in an environment that you're good at, and take your chances when they arrive. That's the player that the casinos are scared of. That's the one that they want to kick out and not let in, because they're sophisticated. They have systems. They stick to their systems with discipline. They don't trade based on their emotions and their feelings and their wants for the day. They trade based on their data and what they know works for them. That's the one who wins in the market. So understand that some days can be boring, But if it's not going to be boring, that's what I'm looking at in terms of trade setups today. So short one today. Appreciate you all supporting the channel. Almost 600 subscribers. Absolutely G. Let's crush it for the rest of the year. Let's crush it in 2026. I'm super excited to trade this market. Essentially going to be looking into trading stocks a little bit more in 2026 since there's a lot of interest in stocks. There's a lot of volume there in all that AI narrative, even quantum narratives. That's what seems to be popping off. And I think it's definitely going to offer some great opportunities. Always going to be trading Bitcoin as my main focus, though. That's what I have a speciality in. And you can't beat the speciality in trading. It really is what gives you your edge because there's no reward. There's no brownie points for being average at everything, being average at trading gaps, average at trading high time frame, average at trading Bitcoin. You get brownie points for being really, really good and really, really specialized at trading Bitcoin or really specialized at scalping economic events. That's what pays the guy who has the most edge. Again, there's no points for being okay at everything in trading. So that's why we specialize, we be patient, and potentially going to be more markets that are going to offer opportunity in the coming weeks, months, years that I'm going to be looking at. And I think that's really interesting. It's exciting times. He who adapts the quickest as a trader makes the most money. So that's something that's always in the back of my mind. But that's what I'm looking at in terms of trades today. Hope you guys enjoyed. I'll see you guys in the next one. GM.